guys, TraderJud here, back with you with a weekly Forex recap video where we go over the 10 pairs from the previous week's weekly Forex outlook video, and I give you some possible trading opportunities that you could have taken from that previous week, and kind of show you the setups that I look for, the setups that I identify based off of the charts that I share with you, based off of the markups that I provide. To better help you learn how to identify particular setups and how to best maximize your profits from those particular setups, and also from the charts that I provide. So without any further ado, let's go ahead and get started. Looking at Eurusd, you can see that I don't have any real trades out of this. I guess you'll notice that this week I've got 3 EMAs in here, moving averages, exponential moving averages, for this week's video, and I'm going to kind of explain why in another video that I'm going to be releasing tomorrow or the day after. I'll probably release the next video on Tuesday morning, but essentially I'm going to go over it a little bit today and a little bit tomorrow in the weekly Forex Outlook video for next week, which will be released tomorrow morning. And then I will release another video on Tuesday that kind of goes more into the reason why I'm including these into my charts now. So for right now, unless I refer to the EMAs, just go ahead and ignore them. But with this, you notice that we didn't really have any good trading opportunities off of this, based off of the chart that we had from last week. It looked like this pin bar right here was going to be a potential opportunity to trade, but because we didn't get a follow-up bearish candlestick, you would not have entered in off of that pin bar to the upside, and so really no good entries off of this. Right soon after I posted this on Monday last week, you see this bearish engulfing candle, and then it went bullish and bearish again. So it has been going bearish, but really no good entry points based off of these markups for EU. Moving on to UJ, you can see there were 2 good potential entries. Let's go ahead and zoom in a little bit so you can see it better. You'll see we have the bearish engulfing candle right here, the rejection of this horizontal line, the support and resistance line, or support and resistance level, where you would have taken the entry off of that bullish engulfing candle, right? We are trending upward, clearly trending upward on UJ. Enter in on the close of that bullish engulfing candle, set your stop loss below previous market structure, which would be these wicks down here, and take profit, 2 to 1. Or thereabout. The reason why I didn't put it 2 to 1 is because of the top of this zone. So I set it for the top of the zone instead, but that's pretty dang close to 2 to 1. So you're looking at 34.5 pip stop loss to 66 pip take profit. Pretty dang close to a 2 to 1 trade. Adversely, we have this bearish engulfing candle coming out of this after multiple bearish candles. It looks like a good rejection of this zone. This is a counter trend trade, so not necessarily a recommended trade, but because these two this horizontal line and this zone and this trend line all kind of meet up in the same area, and like I said, unless I refer to the EMAs, and the 50 EMA is also down there. So strong bearish candle coming out of the zone, could have entered off of the base of that. I would set my stop loss into the zone. I tried to make this to where it could still be easily done as a 2 to 1 trade, because this is a pretty significant bearish candle coming out of this. So it's, again, not quite a 2 to 1 trade, but you could have traded this and been comfortable with doing so. And as you can see, it did just come down and tap the support and resistance level before retracing a little bit and then continuing back down. So as you can see, it is Sunday night. I guess it's after 8 o'clock now, because this is the 8 o'clock candle. So we've got now one candlestick that is painted on Sunday night, and the next candlestick is opening up looking like it's going to go bullish. But yeah, so those are 2 trades that you could have taken off of UJ. Moving on to gold. So with gold, you see we had this, which I'm going to turn these off for right now. Let's go ahead and just make it a little bit cleaner, a little bit easier to see. But with this, if I zoom out a little bit, you can see this this trend line that's drawn right here, the 3 rejections of that trend line. Where this started, price was right below the zone last week when I posted this. And so as you can see, we went bullish, got a strong breakout of the zone. You would have entered in at the close of that candlestick. Set your stop loss into the zone, slightly below the zone, and take profit would have been set. In this case, it was 2 to 1, but you could have also set it to the trend line right here, which actually, until this candle was painted, would have been up here. But after that candle painted, I would have recommended to have moved it down here and then waited to see if price rejected that again, because that's a significant wick right there, which it did reject that again. And so I would have manually closed the trade if you would have had it set to that right there instead. So you would have manually closed on this pin bar to the upside, and adversely, because we would have gotten a rejection to that trend line, that was a good opportunity to enter in for the sell with a relatively tight stop loss, right? Only 32 pips setting your stop loss above this trend line. So a 2 to 1 trade, 64 pip take profit, and it would have hit without any major issues. I guess you could have also entered in off of this bullish engulfing candle right here if you really wanted to, with the good rejection of the 50 EMA right there. But not really necessary because you've already got 2 trades for the week. So I probably would not have continued to trade gold. EA. So here's a good opportunity for being able to hold trades longer. So as you can see, when I posted this video last week, or when I posted this chart last week, we were on this bullish candlestick right here. Got a bearish candlestick, then a bullish engulfing candlestick, more bullish candlesticks until it looked like we were going to be retesting this trend line. Then, as you can see, we finally got this really strong bullish engulfing candle. We would have entered in off of that, right? Because it broke this previous bearish engulfing candle over here. So we would have got in right there. Stop loss set below previous market structure and or below this trend line. So I used it, or I based this loosely off of these candlesticks right here, or the base of this candlestick, so below this wick. Give yourself a little bit of space right there. And 2 to 1 off of this, you would have monitored based on what price was doing inside of this zone, which, as you can see, we did get some bearish movement, but not a significant amount of bearish movement. And every time we did get bearish movement, we also got bullish movement directly after. We would have followed up with this bullish engulfing candle right here, and then another bullish candlestick after that. You would have hit your take profit 1 initially after that. And then if you wanted to, you could have closed half your trade or something like that and held the rest until this trend line up here, which it would have hit, I guess the next day or the next day and a half or so. So that would have been a good trade. I probably would not have held it all the way up into this zone because I was expecting it to bounce off because of these large pin bars right here, but price continued to go up to the zone, which is where it's sitting at now. GBP, NZD, much the same as EA, a very similar setup to the way things worked. So essentially the same thing here. A little bit easier to set your stop loss here. You could have also set your stop loss to just the next level down, right? But where we entered in, we were on this trend line. Price came down, tested this zone, and then went up, right? Broke through this consolidation area right here, which is essentially these 2 horizontal lines, identifying that this is an area of consolidation. Broke out of that with a good bullish hammer, and that's where your entry would have been at the top of that bullish hammer. Set your take profit 1 for the next support and resistance level. As you can see, it reached that with no problems, did not even slow down, and continue to just climb, your next take profit level would have been way up here, which I actually had to zoom out just for your guys' viewing. I had to zoom out really far in order to find that. The next level, which is based off of this right over here, which is based from April 18th of 2016. So price has not been this high since April. Well, it has been this high, but price has not been to these levels since April. So that's a good sign for the bullishness to continue for the pound. Maybe not immediately, right? This is a pretty significant bullish push up. We might get a bearish retracement before it continues, but long-term view, market structure on larger time frames is looking good. So I do expect for this to continue to go bullish for quite some time. AUD USD, almost exactly the opposite, right? So our bat pattern got canceled out this past week. We got a solid breakout right after I posted the video last week, a solid breakout candlestick of this zone. Perfect retest of the zone. That candlestick or the next couple of candlesticks could have been your entry. I went conservative with this entry, so your entry here would have been not the first or the second bearish, or I guess it could have been the second or the third bearish candlestick close is where your entry would have been. And for this, I was not expecting it to hang up here, right, because of this solid bearish engulfing candle. So I would have set my take profit for all the way down at the next horizontal line, support and resistance level, whatever you want to refer to it as. This was not drawn on the chart. I added this week, so if you go back and look at my video from last week, this will not be there, but just envision it being there. I've added that, and that's where I would have set my take profit at. So as you can see, price did break through that, came back up and retested it, gave us another bearish engulfing candle, so we'll have to wait and see what the tonight and tomorrow morning sets up for whether this is going to continue to go bearish or not for this week. But that's a simple trade, very easy trade, good risk reward ratio. These are the ideal types of setups that you're looking for. Perfect break and retest. That's an ideal setup. Next up is EJ. As you can see, EJ really didn't have anything significant that I would have traded. UJ was a much better trade this week for JPY pairs than EJ was. Just no significant movement with EJ. So there's really nothing that I can do with this because our risk reward ratios just wouldn't be good. EJ is something that I just skipped over. UCAD, after gapping down, UCAD came down. You'll notice that I have this channel drawn. UCAD attempted to reach this channel before going bullish. And then the way that we got our entry on this, we had this rejection after it finally broke through, right? We got two bullish candlesticks, then the rejection of this support and resistance level, set an easy 2-to-1 trade based off of that. Stop loss below that wick of that bearish candlestick, take profit 2 pips from that, and that's it. So not a huge trade, right? Only 28 pips stop loss to 57 pip take profit, but still solid, easy trade to see. GDP USD is up next. So right after, or it might have even been during the time of recording last week's video, we got this significant bearish engulfing candle, then a retest of the zone, a slight bearish candlestick off of that. That was your entry point, setting a stop loss significantly into the zone, and then setting your take profit just down to the trend line is what I would have recommended. I set this up to be 2-to-1. This is a rare time where I set the take profit before I set the stop loss, because I'm not big on setting. If I would have set a stop loss my normal way of doing things, it would have been something like that, and that's just not a substantial enough stop loss, right? You're not giving yourself enough room for error, and so I set the take profit first, and then I set the stop loss for 2-to-1. So I don't do this very often. It's not something that I necessarily recommend, but this is the way, for this particular setup, the way that I would have done it. based off of that entry. And as you can see, bearish engulfing candle, and then it wicked the trend line. So good opportunity there. You'll notice that I don't have any other entries based off of this, even though we did have good bullish momentum coming out of this. And the reason for that is because price did break below this. It gave us a pin bar, which looked like a retest right after that, and then went bullish 2 candlesticks after that. And then this bullish candlestick right here, this engulfing one, was significant, but it was so significant that I would not have felt comfortable putting a stop loss below this trend line, right? Because technically now we should be moving this trend line down to here. And that's just too large of a stop loss with a take profit, even if it would have, which it did end up going through the zone, even if you would have set your take profit up here, it's still a pretty significant stop loss, and something that I would not have recommended. So I didn't throw that in there, but this is a perfectly fine trade right here. 41 pip stop loss, 82 pip take profit, and you're done. And last but not least, we have GJ. Obviously, as you can see, GJ does not have any trades on it, as well as a lot like EJ, where there just wasn't really any good opportunity to trade this. So I don't have any suggested trades for this or suggested thoughts for this. Again, as you can see, GJ gapped up and is now over the trend line that is drawn. I do want to remind you guys, if you are going to trade GJ tonight, 150 level is significant. So if you are buying GJ, your take profit should be set at 150 for right now. You will, I can almost guarantee, see some sort of reversal at 150 if price does indeed make it there tonight. I'm not 100% positive that it will make it there this evening or early tomorrow morning, but I would not be surprised if it did hit it next week. And if it does, you should wait and see how GJ reacts to this level. This is a very significant quarter point, and so just something to be aware of, if nothing else. But that's it for me, guys. I greatly appreciate it. Let me know if you have any questions. As always, I'm available on Telegram. If you need anything at all, feel free to send me a message. If not, leave a comment in the comment section down below, and I will get back to you that way. Also, if you guys would hit the like button, hit the subscribe button if you haven't already subscribed to the channel, and if you have, you're awesome. Thank you for the support. And yeah, that's it. So thank you guys. I am out of here. Enjoy your evening, your Sunday night, and into Monday morning, and I will see you guys tomorrow.